Good morning and welcome everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Of course, as I told you yesterday, there is no Santo, it's only me. But if you look at the markets, well, with the US markets closed yesterday, the mood on Dalal Street is much more perkier at this point of time. If you look at the SGX Nifty, it's indicating a mildly positive start for our market instead of the sort of negative opening that we saw earlier in the earlier in Monday morning. If you look at Asian markets, they are quite strong despite the European markets slumping quite rapidly yesterday. German indices, Italian indices, and even the French indices were down about 2.5% after Russia had cut off gas supplies completely to the continent. So clearly, there is a lot of chaos right now in the European markets, but Asian markets clearly seem to be unaffected by all of that. That said, if you look at the flow data, FPIs again were net sellers to the tune of about 800 odd crores in the market yesterday, in the cash market in particular. But domestic institutional investors did make a big comeback. They were quite big buyers yesterday. So that is something that will continue to provide a lot of support to our markets today. Technically, it seems we are at a very critical, very interesting juncture. If you look at the next major resistance for the Nifty, that is supposed to be around the 17,700 odd level. We are sitting about 34, 35 points away from that. So if we do cross that level in a decisive way, technical analysts believe that the next stop then could be 17,850 and then the crucial 18,000 mark. Now, if we take that out, then of course, a lot of people believe that we'll be in a new long-term bull market, and that could take the indices anywhere from 19,000 to 20,000 in the next 6 months. So it's a very critical juncture as far as technicals are concerned. But if we do not falter today and we see some profit booking, which is very, very likely given the global macroeconomic scenario, the support would probably be in the range of about 17,300 to 17,500 odd levels. So that is something that those are the levels where traders will find comfort, and you could see some bit of bargain buying or dip buying coming back into the market. That's it. Now let's quickly move on to some of the stocks that are on my radar today. Starting off with, of course, a debutant on the Dalal Street, Dreamfolks Services. It looks like it's going to be a stellar debut on the Dalal Street. If you look at the grey market premium for the stock, it's currently indicating almost 32% listing gains for IPO investors. Remember, not so long ago when another IPO had listed, it gave about 20-25, and it ended up adding even more gains to that. So clearly, it seems like with two successive positive listings on the market, we could see, people may start talking about a revival in the IPO market or the primary market, and that will clearly be very, very good for the overall sentiment of the market. Apart from that, of course, Dreamfolks, it's not only that the listing gains are likely to be good. Even if you look at the fundamental story of the company as well, a lot of analysts prior to the IPO were very, very positive and had recommended investors to subscribe to the IPO. So clearly, the recommendation has turned out to be quite positive for a lot of the IPO investors in the company. Next stock on my radar is actually from the IT space. Yes, I know, surprise, surprise, given the correction that the IT space has taken since July, August. It's clearly a very surprising name to have, but HCL Tech is something that is looking very interesting, both on the technical charts as well as on a fundamental level. If you look at technically, the stock at this point of time has been hovering around 900 odd level, which has in the past been a very, very strong support for the company, for the stock, and it has seen massive rallies from that level. Previously, the stock had rallied about 1300 odd levels not so long ago. Now, going ahead, Anand Rathi believes, or brokerage from Anand Rathi believes, that the stock could see another rally towards the 1120 odd mark going ahead, which will be a very decent return in the short term. If you look at from a fundamental point of view, clearly the recent management interaction with a lot of analysts, most of the analysts have come out of those interaction with the confidence that the company will be able to maintain or reach its guidance of what 12 to 14% sales growth or top line growth in FY23. So that is going to bode very well as far as the fundamentals are concerned. Apart from that, if you look at the IMS business, which is a very big vertical for HCL Tech, there the management has indicated that they have not seen any sort of slowdown as far as demand is concerned, despite all the macro headwinds with respect to the recession fears in the US, a very massive slowdown in the European economy. HCL Tech so far is holding its gun, and it's saying that it will see very strong deal pipeline as well as revenue growth. So that is HCL Tech. The third stock on my radar is from the newest tech space, Delhivery. Now, very interesting thing happened yesterday. The stock will be in focus today because, SBI Mutual Fund, which is the largest mutual fund in the country, has bought additional stake in the company. Now, SBI had also participated in the company's IPO not so long ago. So clearly, they have now increased their stake to about 4.98%, which is a very considerable stake to hold in a company like Delhivery, which basically I believe that will boost further confidence in the stock's performance. Clearly, the mutual fund has seen value in the stock, and overall, if you look at it from Delhivery's point of view, from a fundamental point of view, despite a very weak-ish, June quarter earnings, which were affected by the integration troubles that the company has been facing with respect to the acquisition of Spot On last year. Apart from that, if you take that out, clearly the company was sounding very bullish with respect to many of its business verticals, including, the express delivery vertical, which is buoyed by the e-commerce, business that has been growing quite fast. So overall, strong revenue growth, but profitability also. The company had guided that they are expecting to turn profitable at an EBITDA level by end of FY23 or FY24 or by FY25. So clearly, valuations have corrected. They have become much more reasonable because the stock had seen almost a 15 to 20% correction on the back of its earnings last month. So clearly, at this point of time, a lot of institutional investors such as SBIMF are finding good value there. Next stock on my radar is from the banking space, Bandhan Bank. This has been one stock that has been on a revival trajectory for the past 2 quarters. It has taken massive strides as far as improving its asset quality is concerned. And Jefferies, came out with a report, with a very bullish report in terms of suggesting that the valuations of the stock are quite attractive still, despite the rally that the stock has seen over the past few months. Although the note of caution from the brokerage's end was that in the September quarter, one could see slippages rise a bit marginally, and the NIMs or the net interest margins could also contract a little bit. But beyond that, beyond the second quarter, they are expecting very strong growth as far as loan disbursements are concerned. And apart from that, the rate hikes that the RBI has taken, that should also be quite strong. They should be aiding the net interest margin as well as the interest income for the company, given that they have a high percentage of floater loans on their books. So that is clearly Jefferies' point of view. They are quite bullish on the stock, and I think the market probably will also take cue from that. The next stock on my radar is basically from an FNOQ point of view. Intellect Design, another IT space stock from the Midcap IT space. Now, this stock came into my radar largely because yesterday's trade, you saw a very large amount of short covering as far as the stock is concerned, as far as September futures of the stock is concerned. The stock has also moved above its 20-day moving average at this point of time. It is looking quite good as far as technical charts are concerned. They're showing that there is good amount of momentum in this building up in the stock. If you look at other technical indicators such as the RSI, or you look at the money flow index, they are at the neutral zone at this point of time. So clearly, there is room for a lot of upside if investor sentiment has finally turned around for a mid-cap IT name like this. On a fundamental basis, Intellect Design actually came out pretty strong after the earnings, after the June quarter earnings. We know that during the June quarter earnings, the large cap IT names were taking a beating because of the muted, commentary from them, and of course the below par earnings performance. But mid cap IT stocks were actually doing quite well, and a lot of investors, HNI investors, have also been adding up on mid cap IT names since the end of July and throughout the entirety of August. So I would not be surprised. I'm not really surprised that Intellect Design has given this sort of a breakout as far as the 20 DMA is concerned. The hope would be going forward, it could break up of the 50 DMA, and then you could see a lot of positional traders also get into the stock. If you look at what Sher Khan has to say, they believe that the deal pipeline of the company is still very strong beyond FY23. So that is something very important, because the argument against IT stocks, which Santo also gives a lot of time, is that FY23 looks good, but FY24 looks very murky. But in the case of Intellect Design, clearly, guys, Sher Khan is of the view that beyond FY23 also the deal pipeline is very strong, and therefore the revenue pipeline or the revenue performance should also continue in the same way that it has been continuing in the past 1 year. Next stock is basically a special stock because This is a brokerage note of the day, and Balkrishna Industry, a very interesting name. This is one stock that I had touched upon not so long ago. I think 3 or 4 weeks ago, I had talked about the stock and how their exposure to the European business could be something that investors might want to take note of. And if you look at today, the stock will be in focus because Morgan Stanley, they have initiated a coverage on the stock with an underweight rating. They believe that stocks, valuation at this point of time have become quite strong compared to the outlook as far as the fundamentals are concerned. Now, this is what Morgan Stanley had to say. They are expecting a considerable slowdown as far as the revenue growth of the company is concerned, largely because of their exposure to the European geography. Now, what is the problem with Europe? So, Balkrishna Industries exports a lot of agriculture as well as industrial tires to European countries. These are tires that are utilized in agricultural equipments, industrial equipments. So clearly, it has a very large, I beg your pardon, very large market as far as that segment was concerned. And now with the crisis in Europe that we know of, major droughts happening also in Europe over the entirety of the summer, the outlook on agricultural equipments as well as industrial equipments is not very strong, and therefore Morgan Stanley is expecting a considerable slowdown as far as the revenue of the company is concerned. The stock also has re-rated. If you look at the past 2 years of performance, the stock has re-rated from about 12 times 1 year forward earnings to about 24 times 1 year forward earnings. Now, the past 1 year, the re-rating seemed justified because the domestic market was also coming back, and of course the European business and the overall export markets are doing quite well. But now with the possibility of recession in Europe as well as US and the domestic market just about coming back, clearly Morgan Stanley feels that these multiples or growth multiples might not be justified. So this is one stock to keep an eye out on, especially those who are looking to go short on the stock maybe interested in a counter like this. We have some comments coming in from some of our viewers. Sachin Khatri wants to know about Hinduja Global. Matthew Phillip wants to know about NCC. So clearly a lot of interest in the mid-caps name. So Hinduja Global is an interesting stock. If you look at the earnings of the company, they have been about decent. Market, of course, has not been that rewarding so far. So something to really watch out for on that front. As far as NCC is concerned, one stock that Santo has been quite bullish on as far as NCC is concerned. Now, I think another stock that used to be part of, late great Rakesh Jhunjhunwala's portfolio once upon a time. But if you look at, the recent performance of the stock, I'll just open the chart on Money Control. If you look at the recent performance has not been that great as far as the company is concerned. So something maybe a short term from a tactical point of view, it might make sense given that the construction sector is expected to do quite well going ahead. But overall, I will not be that confident as far as NCC is concerned. And lastly, Mastech. Pratik Kulkarni wants to know about Mastech. So Mastech again has been a decent story over the past two odd year. Had seen a good amount of correction last year and early part of this year. But overall, I think given that IT space, the multiples have contracted a lot. And of course, given that there is now a lot of interest happening in the small and mid-cap space, I would not be surprised that in the short term or probably till the end of 2022, you could see a decent amount of rebound in Mastech. The company's earnings have been improving. That is, of course, given. The concern, of course, is that what will happen going ahead. Now, it will be interesting to see because they have a decent amount of exposure to the US market. It will be interesting to see if client spending there slows down considerably. But if it does not, then clearly you could see the market again coming back into a place like Mastech. That said, I think we are just about 15 seconds away from the opening bell. Of course, as I mentioned, it will be very interesting to see if we have broken above the 17,700 level. We are currently sitting about 0.3% higher, around 17,720. So very, very important. We hope that the bulls will be hoping that we can stay above this level for today. If we close above this level, then clearly the next move will be towards the 17,850 mark. The mid-cap space, again, outperforming. The Nifty Mid-Cap 100 is higher by about 0.6%, whereas the Nifty Small-Cap 100, I think if I look, check the Nifty Small-Cap 100 index at this point of time, is doing decently. I think Nifty small cap is also higher by about 0.7% at this point of time. The breadth of the market is excellent, clearly, guys. If you look at the NSE, about 1,800 stocks in the advanced territory, whereas only 200 stocks have fallen so far. A very, very strong breadth, a very, very strong market, and clearly there is no alternative narrative that has now been attached to India is clearly working in our favor. So tough times for the bears who have taken a lot of short positions, especially the FPIs and the proprietary book or dealers who have been net short on the Nifty. They probably could be forced to cover their position, and you can clearly see that now, at least on the screen. The Nifty has zoomed about another 40 points at this point of time. So clearly bears would be forced to short cover their shorts, and that could easily take us towards that 17,800, 850 mark. Well, that said, with that, it's a wrap on the show for today. If you have any feedback, any comments, please let us know how we can improve the show, how we can improve, what you want to know and want to learn on the comment section below. And of course, keep following us on the social media links that you can see at the bottom of your screen. For rest of your financial news, I don't need to say it. Money Control is the place to be. Log on to moneycontrol.com and download the Money Control app. And I will see you again at 3 p.m. Till then, have a great trading day.